Hello everyone, welcome back to Chill Deal Trades, where I analyze stocks so you know what's going on. Today we're going to be covering Root. Somebody actually asked for it in the comments, so guys, if there's stocks you want me to cover or do videos, update videos on, please put it in the comments. I read them. So we're going to be doing Root Insurance. This is a stock we've talked about quite a bit on the channel. You know, I kind of made the guess back in the day that it would go to $5, and I did an update video on that, so make sure and go back and watch those. And today we're just going to do a shorter update video with some of the news, and then looking into next quarter's earnings that's coming up in the next couple months, what to be on the lookout for. And if it goes lower, does that mean it's a buy opportunity? Thanks for stopping by, guys. If you're here new, please hit the sub button. Everybody listen up, this is important. We're just starting a new schedule for the channel. Monday video, Wednesday video, and Friday we'll be doing a live stream together. So remember guys, Friday, I do not have a time yet, so if there's a time you want me to do a live stream at, please let me know in the comments. We're going to start that on Friday so we can talk about stocks and go over things, since I'm making less videos every week. I really want to go live with you guys so we can chat a little bit more and kind of talk through the market, because it's a little crazy and I want you guys to make money. Okay, so let's jump into Root Insurance. So the first thing I want to call out, and I think this is part of the reason that the stock has gone down recently. So we talked about their partnership with Carvana, which I think is potentially a good move for them. But news came out, I think late last week, that they actually converted the shares that Carvana had. So Carvana, 100 million's worth at $9 per share, 14 million Class A Root shares. They actually exercised those, so that diluted shares on the stock. So there's, what is that, 14 million more shares. So that's really important, because that dilutes ownership for everybody else, even though Carvana is joining the club and owning shares. But that's something very important to know, that took place. And I think that is having a little bit negative impact on the stock. As always, we know that there's always a really large short percentage flow, and Root Insurance has kind of become a meme stock at this point, and it gets pushed up when all the other meme stocks are getting squeezed. The other shorts are getting squeezed. So until we really see this change, if it stays in that 30, 40, 50 range, then unfortunately Root Insurance is going to continue to be a meme stock, and we're going to see these big jumps and these big pullbacks in the short to intermediate term. So that's something that we want to keep on mind. And then a couple other things. I always talk about institutional ownership, but I do want to also talk about insiders. So insiders, people who are at the company. So this is a pretty big red flag, I would say. I don't think I've talked about this, but this is another metric I always look at. CTO basically selling out of probably all of his shares at this point, if not most of them, for, what is that, like 4 million. When you see big, C-suite people sell out of shares, that's typically not a good thing for the stock, especially a smaller company like Carvana or like Root. He probably doesn't own too many more shares, unless it's like, you think of Facebook. These guys have millions and millions of shares, and they sell out of them to take profit. But this guy probably sold off a pretty big chunk of what he owns. So that's something really important to know. And then second, with institutions. So we had some institutions buy back in 8th month, which is August. I can't remember my month's August. We had some buying on that pullback to 5, and I think that helped prop it up a little bit. But we are seeing a little bit of selling again. We're not really seeing much activity. So hopefully, honestly, best case scenario for Root is for it to go sideways, for it to level out, and kind of just for people to forget about it, honestly. That means the shorts will forget about it, which is what we want, really. We want the shorts to get out of this stock and just leave it be, because that's the only way it's going to start leveling out, go sideways for a while until it's time to go up. And so kind of diving in to what could send the stock higher or lower. We really need to look into the finances. So I mentioned this in every video, but the thing with Carvana is that their expenses have been increasing and their revenue has not really been increasing that much, and that's a big red flag for any company. And so on this last earnings I talked about in the last video, go watch that. I did a really great breakdown of the company in general, who they are, what they do. I'll put it in the description. You'll probably see a little box up here for that video as well. But the main thing is their expenses are increasing significantly. And so on last quarter, they said, we're going to cut down our advertising costs. So a big part of this cost is advertising costs. So really what we're going to want to see Let me bring my calculator up actually, so we'll do a little bit of math here together. But the main thing we want to see is if the decrease in net income losses, because this is going to most likely come down next quarter because they're going to be spending a lot less on advertising. That's really what's jacking this up for the most part. We want to see if the difference between the net income loss and the revenue, that percentage, if that percentage decreases or increases. So like doing some math here, it's going to be really wonky math because we have negative numbers. But let's do 89 million divided by, where's the negative sign? I don't know where the negative sign is, so we'll just keep it positive, but 178. So next quarter, what I want to see is I want to see this number higher than 0.5, because what that means is that their revenue was able to stay high enough with their net income not growing as much, and that's gonna tell us that, oh, actually the partners Carvana was positive for the revenue growth, and they were able to spend significantly less on expenses. So even though the revenue, I'm telling you guys, next quarter their revenue is going to be lower. It's going to be unfortunate, but it's going to be lower. It'll probably be around 50 million. A lot of their revenue comes from their advertising, and so cutting that advertising significantly is going to bring down their revenue more. We'll have to see how much addition they got from Carvana. That's a big who knows, because on the flip side, we're seeing a slowdown in the car purchasing. All the car companies came out, except I think Tesla and Toyota were a couple of cars that saw positive growth year over year. But Ford, GM, all those companies saw smaller sales, smaller percentage year over year of cars being sold. And so we'll have to see if that happens with Carvana as well, because the Carvana partnership is they're kind of offering root insurance as an add-on. And so if they're selling less cars, that's going to bring in less revenue. You kind of get how that works. But those are a couple things I want to be keeping an eye on as this next quarter comes along. And if we see expenses stay pretty high, but we see revenue come down even more, then this most likely will send the stock lower again. But that's a big who knows. Obviously the stock has, we'll go over to the charts now, but the stock has been going lower, but that's mostly because everything has really been going lower. So anything that doesn't have a big following, you know, like the SoFis of the world, those are kind of stocks that haven't been feeling as much negative pressure. But stocks that don't have a big following, at least buying pressure, definitely have been feeling the pain, especially when there's such a large short float that aren't flipping, aren't getting squeezed yet. So kind of looking at this, we don't really have a floor, which is the unfortunate part of this. A couple things I want to look at for this stock. So we do have this big descending triangle here, which honestly kind of a positive, and we just bounced off the top of that. So we're going to be curling back. In theory, we would be curling back to the bottom of that descending triangle. Who knows if that's really the case, but in theory, that's what would happen in a descending triangle. But typically, descending triangles like this are typically going to be a bullish breakout when it happens. So that's something that we're going to want to keep an eye on. If this comes down and maybe starts testing the top of this, this is most likely going to be a bullish breakout for the stock. It's been in it basically since last December. And so the longer something is in something, the longer a stock is in a pattern, when it breaks out, typically the breakout is going to be significant in the most part. It could still break out lower. You know, that's always a scenario. Nothing's 100% in the stock market, but most of the time when we have something go up, it typically breaks below and to the downside. When something's going down, it typically breaks out to the upside. So that's something we're going to be watching out, and assuming it does go lower, you know, we could have this go down to somewhere in the $3 to $4 range potentially, and kind of the end of that triangle, which is basically ends in November. Very rarely do things go to the actual tip of a descending triangle, but if it somehow did, then that would be down at like the 250 range. But those are things we want to keep an eye on. When it comes to more of the short term, you know, say this thing broke out when it lower when it shouldn't have, we really need to get back above 350 or 515, which is this previous low here, to really see any maybe stabilization or potentially more upside. But if we can't, you know, break back above that, we can kind of see this candle here. We broke below. We tried to break back above this zone right here. So you can see all these candles right here, we were testing it multiple times and we broke below. We tried to go back above and we got a big red candle today. And so those are all technically negatives. We're not quite under this candle from a couple days ago. I think that's would be Thursday, last Thursday, which is when that news came out about the Carvana shares. But if we're break below that, then obviously we probably have some more downside, and also if we see more downside in the overall stock market, that's probably going to push more selling pressure on Root. On a positive note, because we want to bring some positivity here, a couple things we want to look at is we are pulling away from the 20 EMA and the 20 moving average. So at some point we're going to need to come back up and test those. Who knows when? As you can tell, we can stay away from those for quite a while. So it tested it in the past back in July. It didn't test it till August. That's a couple months. We tested it in September. We could not test it till November. That's a possibility. But we are seeing some more these start to curl over again, which typically points to more downside. As you can see, when they curl over, the stock typically heads lower. Not always the case, but a lot of time that's what happens. But on the flip side, we are seeing some divergence. We'll have to see if it holds. But basically what divergence is when the stock's heading lower, but the RSI trend line is higher. That's a divergence. And so what we're seeing is we saw a really, what is this, a 20 on RSI at this low back in August, and then we came higher. And now we're seeing RSI being higher, but at a lower price. So that's some divergence happening. And I think we're also seeing this happen a little bit in the SPY as well as the NASDAQ. So we'll have to see if things keep breaking lower and it maybe shows that this divergence was nothing. But that's something where we want to keep an eye on. This can still go lower, but as long as it doesn't go under 20, then we could be seeing some divergence if the stock continues to go down. So those are a couple things to look out. It's just this zone right here you're going to want to look out for. As long as we're under that, we're not breaking higher. That's really line in the sand for this stock. That's something you want to keep an eye on. And if you ever see things like AMC, I'm trying to think some other things that are meme stocks. So TTCF is kind of a meme stock at this point. If you see any of those stocks start to get squeezed, PCE, the SPCE, another meme stock. If you start seeing those get squeezed, Root could get squeezed a little bit as well, which could be a 1 or 2 day buy. But in the long term, we're not seeing anything positive quite yet. But that's all I have for you guys. Thanks for stopping by. If you're a sub already, if you're not, please hit the sub button and join the squad. We'll be doing obviously more update videos on Root in the future. And if there's a stock you want me to cover that I haven't covered in a while or something new, please leave a comment in the descriptions to let me know. And I also want to know your thoughts on Root. What do you think about the company? That's all I have for you guys. I'll see you again Wednesday. And again, as a reminder, Friday, the first live stream together, where we'll be talking about stocks in the stock market. So please come join that and write in the description what time you want that to happen. Appreciate it, guys. And I'll talk to you again soon.